All right, ladies and gentlemen, good day, everyone. Welcome back to another TDM News live stream. And this time around, we're going to talk about the CPI.
Yeah, welcome back, guys.
All right, I go by the name of Tshepo. I've got my colleague here, Zander, and we're going to take a look at updates from the CPI. CPI is one of the biggest drivers in the market. That's the measure of inflation. So we're going to take a look at the forecast, the updates. We're going to go to the charts, and we've got about what 11 minutes to the event. But yeah, let's get right into it. So as you take a look at what happened previously, so CPI decreased to 0.3% the previous month.
Yeah, CPI declined a little bit last month. We're seeing a little bit of, based on the forecast we're looking at, we have some interesting movements happening this month. Expectation is a bit higher this month, so we are expecting inflation or CPI on the one hand to actually go on month. So it's going to be interesting to see this month. But we're definitely seeing like there should be an increase in CPI this month.
Yeah, you spoke about the expectation and a forecast. So 0.7% forecast for now, this month CPI.
Yeah, so we're looking at 0.7. That's the forecast we're looking at the moment. It's a lot higher than last month, 0.3%. And the month before, we were looking at about 1.2%, which is significantly higher. So 0.7 should be fairly decent. I do think we might actually exceed it, but we'll see how the numbers come out this month. We saw PPI or PMI actually come up higher than expected as well this month. So I think it is a little bit of an indication that CPI might sort of exceed that forecast that we're looking at for this month.
All right. Yeah, and as we move over to the PMI higher than expected.
Yeah, like I said, we actually breached PMI by I think about 2 odd or so, 2 odd basis points. So we saw like a bit of an increase coming in on PMI actually. So we should see that kind of translate into CPI as well.
Yeah.
Unfortunately, so far for the month, like the PPI figures, there's no forecast out yet. It's coming out on Tuesday, so we can't really look at that data at the moment.
So the PMI has been on a steady decline since, let's say, December, right? The forecast as well as the actual has been declining.
Yeah, so you saw like the forecast for the month was about 55.4 and it came out about 56.1. So really decent like push up higher on the actuals actually for the month. So that bit of a push higher might give us a bit of an indication with the purchasing from managers' perspective actually increased. That means like the purchasing power is actually getting higher. So we should see that natural inflation number increase as well.
All right. And inflation remain unchanged. And as you also take a look at the chart, so forecast or expectation is 8.3%, but it remained unchanged.
Yeah, so last month, like inflation came out at about 8.3%. The forecast for the month is also looking at about 8.3%. Given like we're looking at inflation actually pushing up a bit higher, I think we should actually see that number being breached, maybe get up to like 8.5 for the month. So I could see us actually getting above that forecast for the month at the moment.
Yeah, 8.5. So you predicting that we might go to the previous, was it in Feb when we had 8.5?
Yeah, like March's data that was released was about 8.5, and I think we should head up higher to those levels. I think with all of the interest rate hikes and stuff that the Fed is doing at the moment, I can still see it taking a while for that to be actually priced into the market. It's going to take time for the interest rates, which is the monetary policy that they're trying to sort of push down on the economy to get inflation under control. It's going to take a while for that to actually come into effect. Yes, they've cut down on spending a lot. The stimulus coming into the market was cut down a lot. However, like Biden and the administration is talking about stimulus again. So this inflation is going to be like a rough cycle to get in. I don't know how they're going to get out of it. It's going to put the middle class and the lower class into like very difficult positions for the next coming years.
All right. And that's going to be very important. So there's the data, the forecast that we're seeing. If you've just joined us, welcome again. We are streaming this live on our YouTube channel, on our Facebook page, as well as Vimeo. So if you're watching this from Facebook or Vimeo, head over to our YouTube channel and just subscribe and watch great content. All right, so that is the CPI. We're now going to cross over to the charts and take a look at what the charts are telling us, make sense of the technicals together with the fundamentals and get a clear direction. Bear in mind that CPI is one of the biggest events in the economic calendar, right? And we're also going to discuss other events. But as we go to the charts, all right, we're going to just be looking at five currency pairs, right, or instruments: Euro USD, gold, Nasdaq, US30, as well as USD JPY. So starting with Euro USD, right? So we're seeing some dollar weakness coming through, or some dollar strength coming through the markets earlier on today, and basically from last night into today. So now, good figures, higher CPI will see the dollar continue strengthening.
Yeah, if we see like the inflation numbers come out a bit weaker, and we see those numbers come in lower than the forecast, I think we should get a lot more dollar strength in. So, meaning that we need that inflation number or that CPI number to be less than 0.7. If we actually see inflation come in like a bit better than that 8.3 mark as well, we should get more dollar strength coming into the market. I do think we're going to have a bit of a mixed CPI today because FOMC is next week. So with FOMC in mind, the higher numbers we're going to get in that initial weakness that we should get, that's going to be even more of an indication for the Fed to actually start more aggressively raising the interest rate. So I think it's going to be a very mixed sort of a day. Either way, if it comes out stronger or weaker, I can just see it actually pushing down lower for the US session actually as the market opens up. I can just see like that numbers come out, and if it's high, we can get that initial push up higher for that weakness to come into the market, and all of that pricing in is just going to cause the market to drop down lower for next week.
All right, and on that note, also gold, right? We're seeing gold currently is pushing down to those previous lows. We also have the channel going to the downside. Are we looking at, just as you said with the the Euro USD, right? We do have FOMC coming up, but if you see weak inflation numbers, right? Gold, how will that react to it?
Well, weak inflation numbers is naturally going to push it straight back down. If we're looking at good inflation numbers, like I said, higher than 0.7, higher than 8.3%, we should get a push up higher. I do think, like I said before, I think that's going to be like short-lived. We're going to get that push higher, we might just push up to the previous resistance and then sort of bubble down from there. For me, still, we need to look at like shorting it properly for that trend to really shift under 1830. We should see that continuation back down to that 1790 odd level again.
Yeah, that's basically a level that is somewhere down here, the 1790, 1780. So there's huge potential coming into the market with that move to the downside.
Yeah, 100%. And like, listen, we all basically know like interest rates are still coming as well, and this might very well be like the day that they start pricing that into the markets. It's a bit sooner than I expected. I expected the market to hover a bit more up until the data comes out, but at the moment, like the market started moving about an hour ago, like very aggressively.
Yeah. All right, we're about 3 minutes away from the event. Quickly looking at Nasdaq, we are seeing it stuck in a range for basically since last night into this morning. So yeah, similar scenario as gold.
Yeah, similar scenario as gold. We'll see this range break during the course of the day. If it is higher figures, we should actually see it push up a bit higher, and then initially, like in the next coming week, actually see it come back down stronger. If we do get really strong figures, we might just break that bottom of the range and continue back down lower.
As we also go to US30 as well.
Pretty much the same scenario as the Nasdaq. They sort of run in the same sort of a club. Same sort of scenario. Break above, we see it like retrace up higher to that previous resistance, and then should get that like retracement back down lower. If we do see it get that stronger figures come out, break down lower, you can take it back down lower.
All right, and then our safe haven. Most traders love this pair, USD JPY. That's where we all run to when there's a bit of uncertainty in the market, right? So yeah, it's currently trading at that resistance there. The opposite on what we talk about with the Euro USD. strong inflation, right? This to continue the push to the upside.
Yeah, 100%. We should see, like, if inflation numbers come out, and we should get, like I said, the natural dollar strength coming in more to the market. We should see it push up higher and actually break higher. It is a bit overextended if you look at the longer time frames, but listen, if the trend is strong in something, you don't really fight against it.
Yeah, you don't really fight against it. All right, and USJP, I like this price action right now because it's trying to reject the top of these structures. We've got the inner structure, the bigger structure, is trading at the top, but no one said it cannot go any further up.
No, like if you keep on betting and saying that something's too high,
yeah,
you always blow an account, right?
Yeah. All right. So that's what we're looking at on USD/JPY. Let's see how it will move. We just went over US30, Nasdaq, gold, as well as Euro USD, and we are roughly a little or above 1 minute to the event. All right. So let's just go through the forecast again on the CPI. Forecast 0.7%. All right. The PMI, the forecast here, PMI came higher than expected, right? On 5.6, 56.1 on that, and also looking at inflation remained unchanged. Expectation is 8.3%. So let's just wait for the event, see how it goes, and anything you want to add on these updates?
No, not a lot to add on it. For the most part, we'll just want to wait and see for the figures to come out. There's a lot of talk on the streets actually that like I said before, like the middle class and the lower income people are really struggling a lot with, especially like the fuel prices out there at the moment. Fuel prices keep on going on. Like South Africa is not the only country that struggles with the high petrol price. So this is going to be a continuous trend at the moment, and oil is not slowing down at the moment at all. So it's one of the bigger expenses that we're actually seeing for the common person on the street.
All right. It's now 2:30. Waiting for the outcome to come. There we go.
Yeah, CPI coming out about 1%. That's a lot higher than expected. Coming in about 1%, 1%, like I said. CPI kind of broke what I thought was going to happen. It came out at about 8.6%, a little bit higher than expected. So we should see like some really nice movements happening in the market. Some clear figures out at the moment.
Right, and you just spoke about this Euro USD. We're seeing it pushing down. Gold touched that level we spoke about here. And as you take a look at the indices, Nasdaq is just
right flying. Jeez. That was a really nice break it had at the bottom. Like, if you didn't go in on a limit order, you probably missed it. On a stop order, you probably missed it. But sure, that's a nice break. Really, really clean break. And see, even like the Dow gap down lower. Really, really nice breaks that we're seeing. If you look at the US JPY at the moment, really nice push to the upside as well. So those inflation figures that we're seeing, this is sort of what I thought was going to happen. Like, it's so high that we are expecting that Fed to actually push up rates more aggressively. It's really starting to get out of control, and I don't think the Fed can afford that inflation number to actually get to 10% at all.
Yeah, they like, if it gets there, they're gonna definitely intervene with that.
Well, like, they have to intervene more aggressively with everything that they do. I can't see them, like, inflation's pushing up so hard at the moment. Inflation at the end of the day, it's good for the economy if it's kept under control. That's why they've got a target of 2% that they need to like stick to. At the moment, what's happening is all the stimulus that's been happening since 2020, it's just making everything so expensive at the moment. And bear in mind, like the excuse that they used to have, like, and we've been saying this in our streams consistently, is it's transitory. Like, it's just going to last for so long. It's not. We've been saying this, like, it's not. They've spent so much money, like the amounts of trillions of dollars that they've pumped into the economy to just give people money to live. It's been ridiculous, and we're seeing like the brunt of all of that spending actually like being absorbed into the market now, and it's a scary situation for the Fed to be in, and Powell will have to sit long and hard this weekend to sit and think about what they're actually going to do.
All right, and as we just go back to gold 1825, Euro USD is around that key level we spoke about, the support level around 1.0539. Nasdaq is just dropping aggressively, 12,091. Dow 31,900. USD JPY broke above that 133.93 mark, and yeah, a close. So if you take a look at USD JPY, that level there, gold that level, as well as Euro USD JPY closes above that level, could indicate more momentum to the upside. We could go back inside the channel. Gold closes below that. It's at a very crucial area, right? We have that level there. We have also the bottom of this channel. Break and close above it, more signs to the downside. Obviously, you're gonna follow technicals to check if you're gonna get more confirmation to the downside. But it's looking really aggressive to the downside.
100%. I think like another point of view on gold is like it's been sitting in a range for the last. If you just zoom out a bit,
yeah,
it's been sitting in this range for the last. For the last couple of weeks,
yeah,
just sitting in this range that's been holding consistently underneath that 1870 level. This, if we get a proper break happening today, like we should see like a really nice continuation to the downside.
Right, that level 1790, 1780, that's the target.
Yeah, like we'll more than likely look at that sort of a range, 1790. I do think there should be more downside to about 1750-ish. We'll have to see, like next week is FOMC, like it's going to have a big driver on gold for next week.
100%. Yeah, what do we say?
Short the Nasdaq.
Right, but look at where it's trying to reject right now. It's sitting right. This level there is at 12,032.
Yeah, it's that round figure that we're looking at, like in and around that 12,000 mark. It's a really strong push, like almost $250 straight down.
Also US 30 as well. We just slowly headed to the downside. So this is how CPI is looking right now. And this is kind of like what we expected, right? So there we go, guys. That's how the market is pushing. So let's just talk about targets from here on. So if we do see that push, I mean, we spoke about Nasdaq. We spoke about gold, Nasdaq. If this continues to the downside, what sort of levels are you anticipating the market to go to?
Let's put on a bit of a higher time frame so you look at like proper levels. If we look at the structure forming down here, we can look at more than likely 11,600. That should be a decent level to look at. If you got it in a good entry now, I will almost say like you can actually look at writing this out for like some time actually. There should be, as interest rates gets announced again, we should get more downside coming. We should get a lot of movement happening actually in the market. If this level does decide to hold, we could be very much sitting in a possible reversal pattern forming as we've got like that higher low actually forming. At the moment, I still have a feeling like we're going to head back down to the 11,600. Kind of see and adjust from there. You can sort of scale out of positions once you get back down there. Scale out of your positions, take some profits. And if you want to ride it longer, you can actually ride like a really nice long trend on it.
All right. Targets for Dow, are you still looking at this zone here?
I would still look at that zone for Dow. It's at 31,580 roughly. We should head back down lower there. From there, get a bounce for a bit of a retracement. Possibly that retracement from where we just broke. And then actually look at taking it back lower again.
All right. So retracement to this level that we broke.
Yeah, I would naturally think like we'll get that bounce, retracement, and then continuation.
All right. Okay.
Oh wow, strong rejection.
On that note, let's just quickly go to Euro USD. Okay, so
very strong bounce from that level.
Gold as well, currently bouncing. But let's talk about these possible targets on USD JPY. If we get a move to the upside, are we looking to break above this level 134,500?
Once we break there, we can actually look at taking a bit higher. Put on a bit of a higher time frame for a second more. Still can't see a target.
Well, short term, that is still the target, right? This top here for short term 134,500, and also a target to a possible downside move that 133,100 key level right there.
Yeah, for an ideal like sort of a longer term continuation and swing trade, you want to get that breaks of those levels to actually take it, right?
100%.
So the ideal sort of a trade would be that break to actually take it back lower to that to take it all the way back down lower to that falling trend line or that rising trend line that we had at the bottom of the channel. It should be like a really big trade to actually take. So ideally, like, I'll actually look at like those levels up there to actually take it to like 31. Let's say about 31. If it does break that 33, 18 level, I'll look at taking it to that 31.
All right, 131. This zone. That looks like a good zone though.
Yeah, 100%. Like it's a nice high that was broken. We haven't tested it yet. Like it's just been straight up continuously. So sooner or later it has to test, and we'll actually take it from there to see what happens.
All right. And yeah, I think we just went through possible targets there. And yeah, ladies and gentlemen, this is the CPI. The figures came out. Basically what we were expecting from today's CPI. And next week we do have the FOMC. So the dollar this week, next week is just going to be volatile. A bit of uncertainty there and there, but with the FOMC coming up after that, we'll then get a bit of calmness in the market, so to say.
Yeah, for about a week or two, and then it's NFP again.
It's NFP again.
Yeah, listen, it's been like a 3 straight weeks of like some high volatile movements, events actually happening in the market. Like the movement that we're getting out of the CPI today is a bit more volatile than I thought. The numbers came out a lot higher than I thought. I did expect high numbers, and normally like when you see high numbers like that, it's positive for gold. But the whole thing is, and this is why I said like we might have a bit of a mixed day today, because taking into account FOMC, if those numbers are high, they're going to price that in. There's going to be an increase for the probability that they're going to have be more hawkish on the FOMC.
Yeah, so it's really interesting on how the Fed will react, what the Fed will do moving forward now. We also have those interest rate hikes that I've been talking about and all of that. So it's really interesting how the dollar will react.
Yeah, I'm very interested to see what they're going to do next week.
Yeah, 100%. So ladies and gentlemen, hope you guys enjoyed the stream, the figures, what you expected. Keep an eye on the markets. Like we always say, just give it a few more seconds, few more minutes, see how those 15-minute candles are going to close for us to get the clear break or rejection of those levels, and then we'll see what will happen next. But the figures, what you expected, hope you guys enjoyed. If you guys have any more questions, feel free to drop us an email, type your questions down below. And yeah, hope you guys are happy. If you traded this event, just let us know how it's been, all right? Just let us know how it's been for you. Are you killing it? Are you making profits? I'm hoping that you guys are really doing that. But yeah, I think that's where you're going to end it.
Yeah. Cheers, guys. Thanks for joining us for the stream today. You can join us like next week. We're going to do the FOMC stream on Tuesday.
It will be
next week
on our session. It will just keep an eye on our social media pages. Follow those pages. Like, subscribe, and more details are going to come with more streams. We are currently working on great content that we're going to bring out to you guys. Just make sure that you like our pages, our YouTube channel, you subscribe to it, and just get more details on the sessions we're going to have, the live streams we're going to have. Hoping you guys are loving the content that we provide so far.
Yeah, cool. Guys, that's it for us for today. And we'll hope to see you guys again.
All right. Cheers, guys. Enjoy your weekend. Take it easy, and we'll come back again next time.